June inflation fell for the first time in 6 years. These 5 stocks move most when CPI drops. Here's why. Here is the setup. Yesterday, the June Consumer Price Index came in at 3.8%, down from 4.2% in May. That is the first monthly decline in headline CPI in 6 years. Energy prices dropped, and that pulled the headline number lower. But core inflation, which strips out food and energy, came in at 0.25% month-over-month. That is just under the 0.3% threshold that the Fed has flagged as dangerous. Fed Governor Christopher Waller warned that if core inflation stays above that level, the Fed may need to raise rates. Today, Chair Kevin Warsh testifies before the Senate Banking Committee. On the same day, the biggest banks report earnings. JPMorgan, Goldman Sachs, Bank of America, Morgan Stanley, Citigroup. This is a collision of 3 market-moving forces, and these 5 stocks are at the center of it. Here is the watch list. JPMorgan at 334, Nvidia at 203, SpaceX at 139, Exxon at 144, Apple at 317. These 5 stocks are the most CPI-sensitive names in the market. Each one reacts differently when inflation data drops. Let us break down each stock, why it matters, and what Kronos predicts for the next 30 days. Stock number 1, JPMorgan Chase, ticker JPM, at $334. This is the single clearest rate proxy in the stock market. JPMorgan reported earnings this morning. Earnings per share came in at $5.55. Revenue around $48 billion. The number that matters is net interest income. That is the money banks make from the difference between what they pay depositors and what they charge borrowers. When rates rise, that spread widens. When rates fall, it shrinks. The market is pricing in a 50% chance of a rate hike by September. That is good for JPMorgan. Higher rates mean bigger profits. But Kronos is not convinced. The model predicts JPMorgan could fall to 302 over the next 30 days. That is a 10% decline. The concern is that loan losses are building and the economy is slowing. Rate hikes might not save bank stocks if credit quality deteriorates. The Kronos prediction for JPMorgan is bearish. Current price, $334. The model sees a decline to 302 over the next 30 days. That is a 9.8% drop. The predicted range is 281 to 346. The concern is that higher rates eventually hurt loan demand and credit quality. If Warsh sounds hawkish today, JPMorgan might get a temporary boost. But Kronos sees the medium-term trend lower. Stock number 2, Nvidia, ticker NVDA, at $203. This is the most rate-sensitive large-cap stock in the world. Nvidia trades at over 50 times forward earnings. That means most of its value is in profits expected years from now. When rates rise, the value of those future profits gets discounted more heavily today. Nvidia fell 3.5% in this week's semiconductor sell-off. The Philadelphia Semiconductor Index, known as the SPCX, plunged nearly 5%. AI spending is still accelerating. Microsoft, Amazon, Google, and Meta have committed over $650 billion to AI infrastructure this year. Nvidia controls 80% of the AI chip market. But even with those tailwinds, Kronos predicts further downside near term. Kronos' prediction for Nvidia is bearish. Current price $203. The model predicts a decline to $183 over the next 30 days. That is a 10% drop. Predicted range is $169 to $214. The chip sell-off this week was not a one-day event. Kronos sees continued weakness as the market reprices AI growth stocks for a higher rate environment. If Warsh testifies dovishly today, there could be a bounce. But the trend is down. Stock number 3, SpaceX, ticker SPCX, at $139. This stock has been a roller coaster since its IPO. It opened at $135. Within 3 trading days, it hit $177. That was a 32% gain in less than a week. It has since fallen back to $139, flat from the IPO price. SpaceX is the purest expression of high beta growth in the market. It has minimal earnings. It trades on narrative and future revenue from Starlink and Starship. When rates rise, narrative stocks get crushed first. When rates look like they might peak, they surf first. SpaceX has moved an average of 4% on every CPI print since its listing. That makes it the most CPI-sensitive stock in this lineup. And of all 5 stocks, SpaceX is the only one where Kronos sees upside. Kronos' prediction for SpaceX is bullish. Current price $139. The model predicts a rally to $157 over the next 30 days. That is a 13% gain. Predicted range is $135 to $164. SpaceX is the outlier in this lineup. The high beta that crushes it when rates rise also launches it when sentiment shifts. Of all 5 stocks, Kronos has the most conviction on SpaceX to the upside. Starlink, recurring revenue, and the Starship program are genuine catalysts that work regardless of the rate environment. Stock number 4. ExxonMobil, ticker XWM. At $144, this is the inflation proxy. Oil prices directly drive headline CPI. In May, gasoline prices surged 40% year-over-year. Now oil is spiking again. President Trump reinstated a naval blockade in the Strait of Hormuz. West Texas Intermediate crude is at $78. Brent at $83. For Exxon, higher oil means higher profits. The company generates enormous free cash flow at these prices. But here's the twist. If oil keeps rising, CPI stays elevated, and the Fed hikes. That hurts every other stock in this lineup. Exxon is the hedge. It goes up when everything else goes down. Kronos sees the stock essentially flat over the next 30 days. Kronos' prediction for Exxon is neutral. Current price $144. The model predicts a very slight gain to $145 over the next 30 days. That is only 0.5%. Predicted range is $137 to $163. The range is wide because oil prices are the wild card. If the Hormuz blockade persists, Exxon could hit the upper end. If a peace deal materializes and oil crashes, the stock could test the lower end. But the 3.4% dividend yield provides a floor. Kronos sees Exxon as the safety pick in this lineup. Stock number 5. Apple, ticker AAPL. At $317, Apple is the calm in the storm. While chip stocks were getting crushed, Apple actually rose 0.6%. When markets panic, money flows to Apple. It has $200 billion in cash. It buys back over $100 billion of its own stock every year. Over 1 billion active iPhones globally. Apple is entering the AI race by integrating directly into the device, creating a potential upgrade supercycle. But even Apple is not immune to the macro environment. Kronos predicts a significant correction. Kronos' prediction for Apple is bearish. Current price $317. The model predicts a drop to $260 over the next 30 days. That is a 17.9% decline. Predicted range is $249 to $326. This is the most extreme prediction in the lineup. Apple is priced for perfection at its all-time high. If Warsh signals rate hikes are coming, high multiple stocks like Apple get repriced. The $200 billion cash pile provides a buffer, but it does not prevent the stock from correcting in a hawkish environment. Here is the complete Kronos 30-day forecast summary. JPMorgan bearish with a predicted decline to 302. Nvidia bearish to 183. SpaceX bullish to 157. Exxon neutral at 145. Apple bearish to 260. 3 out of 5 stocks are bearish. Only SpaceX shows clear upside. The Kronos model is signaling that the market is not pricing in the rate hike risk correctly. If Warsh confirms the hawkish tilt today, these declines could accelerate. The next 30 days will test whether this market can hold up under the threat of higher rates. Here is the playbook based on what Kronos is telling us. 3 stocks are bearish. 1 is neutral. 1 is bullish. If you are long the market, the Kronos data suggests reducing exposure to JPMorgan, Nvidia, and Apple. These are the 3 names most vulnerable to a hawkish Warsh testimony. SpaceX is the one contrarian buy. The high beta that punished it in the sell-off could launch it if conditions improve. Exxon is the hedge. It pays you 3.4% to wait and see. The bottom line from Kronos is clear. The market has not priced in the rate hike risk. Warsh's testimony today is the catalyst. If he sounds hawkish, expect the sell-off to deepen. If he sounds dovish, these predictions could reverse. Either way, the data is the data. Kronos is calling for more downside than upside over the next 30 days. Kronos is calling for more downside than upside. Do you agree with the model? Or do you think Warsh surprises to the dovish side today? Drop your take in the comments. Subscribe to see how these predictions play out over the next 30 days. The data does not lie, but the market moves fast. Stay informed, stay disciplined, and as always, this is not financial advice. Do your own research. See you in the next one. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.